Morning, all. It is Friday the 6th. I'm in Dallas for the weekend at a event here that I'm going to be interacting with a lot of your medical professionals, mostly doctors and dentists. There's a few attorneys in the room, but that's going to be getting deep into their businesses as well as how they're trying to eventually go outside of their business and start building that long-term cash flowing wealth with respect to other alternative forms of investment, right? So we're talking about the real estate, we're talking about notes, we're talking about other ways they're going to trying to get further and further out of the stock market. So the only way that they use Wall Street anymore is to finance things, right? We talk about that all the time here, utilizing leverage to finance your investments, also using that leverage to expand your investments, because what we're doing with inflation, as we know, is we're paying it back at it with a decline, of course, and we're growing that income coming in. We're talking a lot about inflation in this particular event. One of the reasons I'm excited about being here for this particular event, because inflation is what I love to talk about. But for us right now, we're going to see jobs reports that came out. You're going to see information all over the news about how stock market is having some gains today because of what's happening in the jobs report. More jobs reported than what was anticipated. So it's always something that helps the equities. A little bit harsher on the bonds. So bonds did take a little bit of beating today, this morning as things opened up. But what I'm seeing is that they've come back. So it opened up and it actually went down to its lowest levels. And I drew this channel chart here to remind us, and this is the MBS 3.0, to remind us what that channel looked like. So we did, of course, pop up in the last few days above the resistance line where we have seen before. We've popped up and come back down below. Right, so we've been bouncing against that particular line. We hit it. We didn't sustain our growth above it, or as far as expanding above that, because also we bounced off the top of the channel. So we had two different resistance lines that it was playing with. Not only do we break above what was just this line that was established in the past, but when you consider the channel, we hit the top of that channel. We've come back down from it. We hit the bottom of the channel today. We're coming back into the middle of it. So I believe that we're going to continue to ride that channel up, but we also have to bounce above this, just hard resistance lines. So we can go back into a wedge pattern. When you're looking at the technicals, right? We're going to back into the wedge and see where it squeezes, whether it goes above it or back below it. So for right now, what we have as far as analysts are saying, we're going to continue to float into this and see how things look. But rates are awesome on the day-to-day. We'll also be watching that. If we see rates, make sense that day to get you locked in as your appraisals are coming. We know that you're getting closer to close. We're definitely going to look closely at that, because what we were able to quote a few weeks ago versus what we're getting today, rates are phenomenal. And like I've said in the past, there's only a 10-month window in the history of watching rates that were better than we are today. So don't be concerned about where the rates are going, but also know we're in great shape. Things are looking very, very, very good, very advantageous for the real estate investor. The homeowner, person buying a house to live in, it took a little bit more of a beating today than what it would have had the jobs report go the opposite direction. But there may be some revisions down the road. We may not be seeing, it may be possible that this jobs report may be a little more advantageous than what is reality. We've seen that happen quite often, but we'll see how the future brings. Just know we're still in phenomenal shape. If rates are a concern for you, you'll eventually get to the point where it's not as big a concern once you start really wrapping your head around economics in the market and what inflation is doing, because inflation is freaking crazy hot right now. But even though, even that, just be happy with what we've got, because the rates are amazing, best I've seen in my 23 years. Questions, comments, anything, let us know. Go to the page, scroll down to the donate button, take a look at that. Between the donations from those of you who are watching, they're going to the website and donating, between what we've been able to put out every month because you're doing business with us, that $50 for every transaction, plus myself and a business partner of mine, Floyd Carnes. When you go to and also Joe Moyes, if you go to quitjerkingoff.com, you'll see those guys there. This last week, what we were able to also contribute to some of the cause there, we're well over $100,000 that has been contributed since last September to OUR and to benefiting other victims of human trafficking. Appreciate you guys. Subscribe, and we'll just see you guys on Tuesday.